We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. Good morning, everybody. Welcome back to another live stream, and it's a big one today. We got the NFP report, jobs numbers, job statistics, of course, critical stuff here to move markets. In fact, NFP and CPI are two of the biggest market-moving economic data points we see often in terms of a one-day move. You get some of the biggest one-day moves following an NFP report or following a CPI report. So it is very pressing in terms of its importance to the market. Clearly, people make big decisions as to what they think of the economy based on the statistics and jobs numbers that we get here. And the question becomes, are we going to see more of the same here that we've had recently? So if I just pull up our U.S. economic heat map for a second, we have recently seen some jobs data that's not been particularly attractive, especially for the dollar. We have seen JOLTS job openings coming in soft this week, ADP numbers coming in soft, jobless claims about as expected, so not too hot, not too cold there. But unemployment rate in the prior reported NFP report did tick up to 4.6%. So we have a jobs market that is showing signs of slowing. And so a slowing jobs market, I think that the best way of at least reflecting it in the form of what the government data tells us is that it is a low hiring and low firing type of environment. And so that has the Fed nervous. What I mean by that is that the Fed is saying, okay, well, if you have low hiring and low firing, if you keep going in that direction, or the direction we've been going, right? Take a look at, we go under our economic data tabs. By the way, added this for my Edgefinder friends. I'm trying to organize as much as I possibly can this tool to make it easier for people to find stuff. I put our specific economic data, like if you just want to look at historical NFP reports, for example, you would just go under economic data, labor market data, NFP. I feel like that makes sense. The last time that we had an NFP report, we did have a surprise beat on the actual number of jobs added to the U.S. economy. We had 128,000 compared to the forecasted 50,000. So it was a strong jobs number last time. The problem was it was laced with an unemployment rate rising to 4.6% above expectations. So will we get a continuation of this bigger picture downward trend that we've seen over the last few years in the NFP report? What we can see is the NFP report has been generally, I mean, just from a technician standpoint, you could say we've got lower highs overall on the NFP report itself. So when it comes to jobs data, are we going to continue to see the theme that we have for a while, which is cooling jobs data? And if that trend, right, people sometimes will say, are the jobs data fake? Are they real? People have strong opinions on this. It's a controversial matter even. People dispute how much, you can trust them or not trust them at all. But here's one thing that I think is maybe more important. I think that even if there's some government numbers that kind of cook the books at all, we don't know. We can't like obviously see it per se in the form of like, we can, if it was too obvious, then there would just be like, okay. Anyways, my point is this: the trend is what matters. The trend is down, right? The trend in hiring in the United States is trending lower. We're seeing softer jobs added to the U.S. economy. How much you believe the numbers themselves or not, I think matters less than just like, okay, what's a general pulse? They can only, if you think that the government, for example, is hiding the numbers, they can only hide so much, right? So the trend matters. Generally speaking, we've seen revisions lower in the U.S. economy. We've seen the monthly jobs report trending lower. The point is, jobs data generally, it's very obvious, is trending lower. And so the question becomes today, are we bottoming out, or are we going to go into negative territory with some of the jobs report statistics as we have with an ADP, right? This is the private payrolls. We have seen ADP trending lower If it would load here, give me a second. Might need to refresh the page. Oh, I just refreshed it right as it loaded. You see that? Anyways, ADP, right? ADP has been trending lower. Private payrolls, in fact, getting into the negative territory. So we are seeing a really poor jobs market in the United States, and it has the Fed worried. So the question then becomes, what does the Fed do to combat that? Well, they cut interest rates. And so cutting interest rates is basically the idea of just printing money into the system. And I think that's part of the reason why precious metals have been such a solid bet in the last year or so. Jobs market cooling. Inflation has also been becoming more tame. And so we have this situation where the Fed has more room to cut interest rates and other central banks, not just the US, but we have a global central bank easing story that has been going on for the last year or so. The ECB cut like crazy, right? They cut their interest rates. If we go under interest rates data, interest rates, and we take a look at, for example, Europe, right? Look at Europe, and what you can see is they've just been on a cutting spree. Now, they've recently, or in the last year, they've slowed their rate cut process. But the point is, we've seen monetary policy globally soften up, cooling interest rates due to cooling inflation globally. And what that does to gold and silver is gold and silver hear that and they say, okay, central banks are printing money, fiat currency losing value, precious metals higher. So the big picture theme for me on precious metals still remains my most convicted play. I still think gold and silver can continue to run. However, you know the old saying, the trend is your friend until the end. And so you have to be looking for the end. And so if you are, for my perspective, I am already long gold. In terms of where I need to get out of this trade, right? I've got a stop loss below this low. I want to see, in terms of, for me personally, to stay in this trade, higher lows and higher highs. So we've got this low. That is a clear point in which if price were to completely fall apart on gold, that would be a signal for me to cut the trade and say, all right, technicals have broken ranks here and moved lower. Now, in terms of where, I could potentially manage this trade, someone asked me yesterday, where's your take profit on gold? I don't have one. So I like to trail stops. So what I'd be looking for here is if we can get a break and close above the prior all-time high, that will give me the confirmation that we've got room to trail my stop loss further into profit. Where am I putting it? Probably right below this intraday 4-hour chart candle swing low that we saw yesterday. So if we can get follow through to the upside here today, if we can break to new highs in gold in the next few days, that will give me the confirmation I need to take this stop loss and to trail it in. The reason I'm not trailing my stop loss just yet is because I don't know if this is actually a higher low just yet. We're still chopping around and we've formed a low here, but for me to know it's a higher low, I want to see a higher high, right? It's really simple textbook technical analysis stuff. I'm looking for a new higher high in order to trail my stop loss further into profit. Let me just adjust my camera here. So I'm looking for that here this morning. If we take a look at the 4-hour time frame on gold for the gold traders in the room, we had a really nice respect of this area here. So we broke out of this 43.80 level, right? We broke through that, retested it even intraday, and then found buyers, pushed back up. Now we retested yesterday the 44.20 level, and again, nice little bullish engulfing candle off that area on the 4-hour candle. I think we look good, but it does matter big time what this NFP and unemployment rate statistics, the percentage here that comes out this morning, it matters big time because it will continue to set precedents for what the jobs market looks like. If you are somebody who is USD bullish, you want a strong jobs report, meaning strong hires and low unemployment rate. That would be dollar bullish. What would that do to gold? It would likely send it lower, right? Stronger dollar, weaker gold. On the flip side, if you were to see a poor jobs number, NFP, the non-farm payroll number, the jobs added number, comes in soft, lower than what people are expecting today, then the dollar could weaken, sending gold potentially to that high. So again, when I talk about this on my channel, I talk about this theme, this concept of follow the trend. I'm not just talking about price action. I'm talking about macro trend as well. What's the macro trend? Well, we discussed it just a moment ago when we were looking at the NFP report over the last few years. What has been the trend? What has been the theme? The jobs market has been trending lower. I don't know where the jobs market is going to bottom out and start to move higher. I don't make big predictions in my trading. I just follow trends, both technical and arguably more importantly, macro, right? You can look at price action all day long, but I think you also want to make sure you're actually aligning with what's moving the markets. The jobs market is really critical to the overall market story. And so this jobs market trending lower. Oh, and by the way, add more confluence here. We can see the jobs numbers coming in soft in multiple areas. Take a look, for example, JOLTS job openings here trending lower. Job openings have been weaker in the United States. Unemployment claims have been, actually not too bad recently. That's actually been a brighter spot for the jobs market. Wage growth has been a little soft over time, although still higher than inflation. That's a good thing for the economy. Higher wage growth for people on average than inflation. Is a boost to people's spending, right? If you think about it, if you're getting more wage increases on average as a collective economy than the inflation, that's positive. But then if we take a look at unemployment rate, you can see it's been pretty decisively over the last few years, modestly trending up. So the point is we have a jobs market that is slowing. There is no, I don't think, just listen to the Fed officials. None of them would dispute that the jobs market is slowing to an extent. To what caliber is up for debate. But the big point is jobs market data is slowing. That is a trend. We could see the reversal of that trend, or we could start to see the jobs numbers come in strong. I don't know the future, but I'm just kind of following along with both price trend and the macro trend. The jobs market weakening, inflation cooling tells me I want to stay long gold for now. And now I'll use price action to be on the right side of, the technical trend as well. So if we break structure, then I stop out, I rethink the setup and look for another opportunity. But that's kind of my thought process on gold. Silver's actually looking really good here this morning as well. Retested this 4-hour chart area again. I've mentioned that I would be potentially interested in a long setup if we got a move back to $70 an ounce or $70.50 an ounce. That would be interesting to look for. We've been kind of barcoding and consolidating here at these highs. But I do think that silver and gold, the path of least resistance, at least for now, is to continue trending up. I don't want to make this, I have to say these carefully when I mention this. It's not a guarantee that gold and silver go up. Like, they could drop hard, but if they do, we have to manage risk. We have to be ready for that scenario. And so we'll see what the jobs numbers bring. Please be careful on these jobs report. A lot of people lose a lot of money trying to gamble on these things. I'm not making some big prediction as to what I think NFP report. I'm not dropping to the 1-minute time frame and throwing a huge bet on red or a huge bet on green, I guess, for the sake of candlestick charts, right? I'm not making some huge call on what I think the jobs market is doing. I don't think anybody has a massive edge on that front unless you have the data beforehand, which is not something that is legal, at least to my understanding. So we're, average retail traders. For me, I think the opportunity is to follow trends, macro and price. And so trend is to the upside for now. Until that breaks, I'm going to stay with the ideas here. We'll bring in just a second Chris Pulver here, but first we've got about 1 minute to go here before the jobs report. Let me just pull up our all markets view so that we can keep an eye on this. What you've got on your screen here, guys, is you have, of course, currently the stock market here. We have Dow Jones, Bitcoin, gold, dollar index, silver, oil. We got a little bit of everything on the screen right now, and we are just about to get the number. So let me just pull up Forex Factory just so we can see the number live. What's going on, Chris?
Good morning. Happy Friday. Non-farm payroll, baby.
Yes. Got about 10 seconds to go here. Just going to see if we get any price reaction. I've got everything pulled up for the viewers just to see across the screen. Jobs numbers should drop in just a few seconds.
Forecast is what, 62K?
Is that right? 62?
62
okay, initial reaction.
I think was the. Yep.
initial reaction, we've got indices moving a little bit higher here. Dollar index is a little firm on the 1 hour chart. Gold, silver, not really moving very much. Let's take a look, see what we have.
Unemployment rate down 50K.
Okay. 50,000. All right. So it's pretty much the opposite of last month's. We have jobs added, little soft, but unemployment rate ticking lower. And so maybe a little bit of a mixed report, I would say. Chris, what do you think?
Sure. Yeah. I mean, I guess as long as we're coming in positive, then okay, it's nothing bad. I mean, the unemployment rate at 4.4, probably a good thing. Honestly, I think that's more important than the numbers. I think where the Fed would really back themselves in a corner if our unemployment rate's creeping up to 4.7, 4.8, 4.9, that's gonna be a hard thing to argue. So going to 4.4, I mean, we're at 50K. The revision was 64 down to 56, but I don't know. I guess as long as we're not negative non-farm numbers, yeah, it's probably taken okay. I mean, looking at the order flows today, I think the sell-off yesterday might have been pricing a little bit of a softer NFP anyway. So I think we're looking at maybe staying relatively firm for the week.
Just taking a look at yields here, Chris, on my side, we have the 10-year yield actually trending higher here, moving higher here in response to this. Here's the 2-year yield also jumping on this. So perhaps a little bit to your point about the lower unemployment rate percentage catching the market's attention. You got to think, I mean, the bigger surprise here, let's think about this logically. So the bigger surprise of the two would definitely go to the unemployment rate, right? Because that was previously at 4.6. We're forecasting for 4.5. We dropped to 4.4. 50 between 66 and 50. That's only 16,000. That's a pretty close to the number.
Sure.
But then this is maybe more meaningful. And perhaps what that does, Chris, maybe it continues to boost the 10-year yield, which I don't think we're at mission critical with that to any degree, but it could slow down the expectation for rate cuts in 26.
For sure. I don't know how many sessions we had last year where I said, if that 10-year yield creeps up to like 4.6, 4.7, I think that's going to be a problem. I mean, I've got chart alarm set here. Here's a 4.3. Even when we started to cut rates, I'm looking to see, do we get down to fresh lows below sub 4? Last time we were sub 4 was literally Liberation Day for a split second. And then before that, it was when we started cut rates in 2024. So it's been a minute since we've had a big improvement in the 10-year yield. Yeah, that's going to be a problem if we're up into the high 4s, but I do think that this is being watched very closely. If we're going to see it just sideways, okay, fine. Do you think that we're going to see 2 cuts this year, Nick?
It's really hard. It's actually, I think yields is like one of the hardest things right now. I think alongside oil and yields are some of the hardest things to call. And I think even harder than long term. Like, I feel like a little bit more confident in saying I think that the 10-year yield and the 20 and the 30-year yield are probably not going to move a traumatic amount this year unless you have something wrong. The 2-year yield is probably the hardest of anything, right? Because you're looking at this and you're saying, all right, is the Fed going to have, this one's volatile, right? So the 2-year yield's a little bit more reflective of what the Fed monetary policy is likely to do. And so, we do have recently we've seen the short end of the curve more administered by the Federal Reserve trending lower here. And so you can see it is poking up a little bit here this morning. I think that the Fed is probably going to cut 1, maybe 2 times this year. I think the bigger theme, though, is just don't lose the story of rate cuts. If we start talking about equally possible for rate hikes to rate cuts, it's a very different market environment. But I think, like, if you're talking about I think a lot of the story here in the stock market, like part of the gains, I don't think it's come from, the Fed's massively going to cut interest rates and ease everything. I think there's like a lot of themes going on. You have the AI stuff, you have deregulation, you have tax breaks, you have like a lot of stories playing at once on why the market itself, I just think the stock market's not built on, we're going to get 4 cuts this year. I think it's more built on other things right now. And so The big question is, does it matter so much if we get 1 or 2 cuts to the stock market? And I think the answer is maybe not.
Yeah, I would side with that. Also, I don't know what the timeline is, but I believe the Supreme Court is going to have to make some type of headline or some type of ruling on these tariffs as well. Interesting. The prediction markets are saying that their highest probability is not to uphold the tariff policies that we put in place last year. So I don't know. I find that interesting. I don't know what the market's going to do to that, other than, maybe the beneficiary is small caps, maybe retail. Like, if we take away, tariffs, essentially it's a tax. It's like, is that flipped around and seen as a good thing? Even though that would take away, isn't it taking away like 500 or $600 billion in U.S. revenue, as far as like, what we take in for tariffs? Takes away this notion of sending tariff dividend checks when they're all of a sudden, giving us nothing. So I don't know. I'm sure there's some creative way to backdoor some trade policy, but I guess on the nose it's going to be different.
Could be an interesting story with that, because the response I've seen a lot of places is like, okay, well, if they do that, then the administration will find other ways to do it, more within their power, et cetera. But the question is, if that happens, it could introduce some uncertainty. But I saw, of course, who Tom Lee is. I was listening to him talk a little bit about this. Made a good point. He pointed out that if the tariffs get shut down, then in some ways it could be considered positive or negative. There's some worries about it. There's also some real positives. One big positive, Chris, that I would see with that is, and to his point, is that if the tariffs get shut down, then it's sort of a check or a backstop or a limitation to just how much tariff action we could see going forward, which obviously last year was a big worry for the market. So perhaps like limitations to how much tariff action can go on could be perceived as a positive thing. However, uncertainties around, national debts and et cetera, and the tariff, obviously the added revenue that it has recently generated for the U.S. economy. If they need to fill that gap of money, what could that do to the 10-year? Well, it could send it higher as people, where's that missing money going to come from? Printing, right? So I see both sides of the coin. It's a difficult one for me to try and call, what does that do to the market? I think uncertainty prevails, and I think gold is a winner in that scenario, because it's like uncertainty, potentially higher, longer end yields, and uncertainty about national debt, frantic uncertainty about what can and cannot the different politicians do, et cetera.
Right.
So I keep coming back to precious metals. I don't know, it's a weird one, Chris, because it's like I don't necessarily like being long at all-time highs, or just kind of like that's all I've got. But like for me right now, it's like indices are a tough one to really get super bullish on. I think valuations are high. I think pullbacks are more constructive. I am long the Russell. Do you have any trades on the Russell?
I've got a bunch of ratio spreads on the Russell. Okay. I went, I'm looking at 175 by 170, 185 by 180. They're way lower, but they're just income trades right now. I said this the other day, talking about gold. I'm going to make a pretty bold prediction and say, I'm not sure what 60 days is from now, but let's say like middle of March, that we hit the 200-day moving average. Okay. Because we're at 580 plus bars, roughly 20 to 22 candles a month in trading. Once we get over 600, I feel like we're not going to run too much higher and hotter without having a pullback. Now, that's a massive correction. Like hitting this 200-day moving average is like an 18.5% correction. That is like, and again, it could happen. I want to buy the dip. I don't know how it's going to happen. I don't know what the reason would be, but that does just make me a little bit cautious for like this February, March, April window where, let's say it does happen. Let's say in 60 days, we are talking gold at, let's say sub 4,000 again, or 3,800. I don't know how ugly it feels, but it's like, I do want to buy that dip. I really do. To me, it'd feel a lot better as an opportunity to get a position like that to start reestablishing another core position versus getting gold at 4,500 and just watching it continue to go. I mean, right now this chart is technically broken if we just don't pull back, but I know there's no reason for it to pull back. That's what I'm like. I'm stuck with the reason on why gold could be the beneficiary of all these things, but technically just give me the pullback. So I think there's a similar to 2025, we had like the Trump tariff snow globe effect. It's like we could have something in the precious metal space. We could have something in the US dollar space. We know that there's uncertainty stuff out there. It's like something's going to stick. And I think we'll get a big shake up. What comes out of it? Probably good chances to buy dips on gold, maybe buy some dips on indexes. Tom Lee is pretty known to be bullish.
Always.
He's looking at like if there's reasonable correction.
He thinks there's going to be a correction. He said,
he said correction first.
I was like, wow, that was out of character.
Yep. And correction first also, I mean, he's not talking like some chump change correction. He's talking like, 10 to 20%. So what would be, it's like, again, what, how, who, what, when, where. It's like, I don't know why, but if it happens, this is why dry powder, cash at the ready, be ready to pounce if the market offers it up. So I don't know. It could be, I'm looking at gold, especially for like this technical bar count I don't know. It's got to pull back. I'm still long gold. It's just, I want to be longer. I want to be at a bigger position. We are at 575 right now. So within 75 bars from here, I think just right over the 600 handle could be where things get a little bit interesting. So that's not that far away. That's about a month away. That's what I'm saying. Like probably by March, like in this like March, April window, we're probably at least having some pullback to the 200-day moving average. So
I've got another chart for you following up on precious metals. Well, just to tie a bow on what you said there in terms of precious metals, I'm with you. I'm long gold as we speak as a momentum trade. I've got a stop loss that I'm going to keep trailing on it. From a bigger picture, if you got a bigger dip, I'd be thrilled with it because I could go buy maybe some gold miners that I like and maybe add some silver plays. Like silver is such, I'm with you on the broken chart theme. Like silver's so far away. I couldn't even get a retest to the 20-day moving average to get a bid in there. So, I love the momentum. I'm trading it for now. And to your point, I also don't know what breaks that chart. Eventually it happens. Be careful to listeners believing that it can't come down because it certainly can. Gold and silver can have major corrections. But right now, from a technical perspective and from a macro perspective, I'm with you. I don't see the reason for that thing to correct at this time. It will happen eventually, but for me, I'm just trailing stops and riding it until that happens. I got another chart here for us. This is XLK versus RSP. And so for listeners who are not super ETF savvy or stock market savvy, XLK is technology stocks. Think NVIDIA, Amazon, Google, Microsoft, etc., versus RSP, which is the S&P 500 equally weighted. And the reason I bring this up is because some interesting rotation is taking place under the surface right now within the stock market indices. We see the Dow Jones and the Russell doing pretty well out of the gate here this year, as opposed to actually the lagging indicator or lagging index seems to be technology, right? So technology stocks, there's some jitters out there. Yesterday, there was a big drop in Broadcom and Qualcomm or Oracle, right? We have all these, NVIDIA dropped. And so we have these worries. So I'm looking at XLK versus the RSP, the equal weighted S&P 500. We've gone from this, monster upward trend, really nice upward, overall technology stocks outperforming, to recently a little bit of a rollover effect. The last time this took place, it was very brief, and then tech started winning again. So I'm wondering here if maybe we have something, especially at the turn of a new year, Chris, if this rotation has a little bit more legs to go. Like if we start breaking lows and continue to move lower, could we see a different landscape in 26 than we did in 25?
Sure. Take a look at S&P. I mean, I think that this type of year, if we have a great year, all hands on deck. Let's see if the market wants to push another 10+%. But looking at the market breadth, I mean, almost 70% of S&P stocks now above the 50-day moving average. That is a big turnaround from this November pivot. We started to get really, I mean, again, the market breadth conversation came up a lot in October, November.
Yeah.
What's going to happen through the holidays? I mean, that's a big switch from 31.5% below. I mean, that would be like 70% of stocks are below a 50-day moving average. And now we have 70% of stocks above a 50-day moving average. And again, most of I've seen it's like we're at 63% in a buy zone above the 200-day. So S&P market breadth is way, way better. We are getting a slight improvement in the NASDAQ, but only 56%. So, I mean, give the credit to RSP. This is what looks to be a pretty compelling case for the equal weight or the rotation into other stuff. If you look at the heat map, I mean, there was some pretty big names that were bright red yesterday. Micron, Broadcom, AMD. I mean, I still think these are good plays. I think it's the physical side of AI, not the speculative side of AI. So, I mean,
Sure.
Maybe it's great for more copper, more silver, more aluminum, more whatever. I mean, it's like the physical side of what does it take to build out a data center. The residential construction jobs I'm still looking at the background is like as a canary in the coal mine for, if we really worried about the labor market softening, then look at residential constructions. I have that here from the St. Louis Fed. That would be, I just saw that headline, 2000 stimulus checks timeline, to be determined probably.
Could I get one
who
of
knows?
those,
No, geez. I mean, how is that good? How is it good? It's like, do we not remember what 9+% looked like from a data point? I mean, here's another thing I will check. We have it in Edge Finder, but month to month when we're getting US CPI data, I mean, this is one like real-time indicator that I want to see. As long as this is trending lower, I'm encouraged to see that CPI numbers will continue to go that direction. So 2.7 was our last headline print. And I know that there was a lot of arguments after the fact because basically the I don't know if it's put out by BLS, but they just kind of skipped or put a 0 for October since we had the government shutdown.
Right.
So 2.7 was the headline. That was the number afterwards was like, well, it's because they put a 0 and it's messed up the averages. And that was what shows a huge improvement is really not fair. So the next CPI print, because we've been trending lower, here's what the kind of real-time index looks like. Like that's a pretty good drop from 2.7 to 1.718. I mean, I would say that from that 2.7 headline reading that we had in the US, maybe we go down to 2.6 or 2.5. And again, lets the market kind of breathe a little bit of fresh air. Maybe the cuts have been fine. Maybe there's room for another cut, like you said. Look, man, this year to me is like, I don't want to fight the path of least resistance. I think the market's going to find a way to stay up. I have an interesting take this year on, I think we're going to be surprised how many weeks and months are still positive, but they might be barely positive, right?
Yeah.
That's what I think. I think that's one way I'm going to try to position myself this year is the market may not deliver 10, 15, 20% upside, but it's going to be hard to see it go down. So
Chris, yeah, keep going. Sorry, I didn't mean to cut you off.
It's like I'm literally taking trades and strategies based on that, because if I'm surprised at the upside, great, that benefits me. But if we have like little to no movement, I don't want to be chasing big moves and anticipating huge swings when it might be all within like a plus minus couple percent,
Sure. Yeah. And I was just going to say, I kind of resonate the same outlook. Like if I'm looking at my indices here on top setups, we have lost, and this is an indicator worth mentioning because Edgefinder's been pretty bullish on indices for the better half of like the last 3 or 4 months. But we just kind of lost our score here to neutral camp for S&P 500, to NASDAQ, and the Dow Jones is flat at 0. And so I thought this was worth mentioning because I was wondering, where is that score drop coming from? And if I look at the top setups compact chart, this just kind of groups everything together. Eco score for economic data, specifically for NASDAQ, S&P 500, Dow Jones, it's getting pretty lackluster numbers. And I think that's actually a fair conclusion. Like if we just take a high level overview, let's think about, we are at all-time highs in the stock market. And if we go to our, let me just collapse this, go fundamental analysis, economic heat maps, US economic heat map. If I'm looking at this, what worries me here is that you have a lot of concerning stuff in terms of Jobs numbers coming in soft. Know that we do have inflation cooling, but then you also lost things like the retail sales numbers, manufacturing PMI is not looking super hot. So for me, I'm like, okay, we're at all-time highs, but a lot of our economic data is a bit lackluster. So I'm kind of in the neutral camp when it comes to indices as well. In fact, I think cooling jobs and cooling inflation lends a little bit more towards, and high national debts still lends towards like, okay, I like the metals story. I'm with you. I think you could get better positioning if we were to get a pullback. But then I also just wanted to follow up with our charts that we do every week here together. The AAII Investor Sentiment Survey did come out here. What we can see here is the latest filing still shows a bit of a slightly crowded bullish theme. I wouldn't say that we are at massive euphoria, but leaning bullish. Is that fair?
That's fair. If that creeps up to like 47, 48, then I'm looking for a short-term top.
Yeah. And I think that actually, just because you said that, I think that's backed really well within our studies that we did. I did some studies on specifically the crowd sentiment. When AAII investor sentiment, bullish sentiment is above 45%. Look at the forward-looking returns. They're not very attractive. So kind of worth keeping an eye on that.
Yeah. Well, again, look at the shorter term as you go, 1 day to 1 month, expect some pullbacks. But buy the dip, dude.
Yeah. Well,
it's probably the plan is buy the dip.
Sure. And I think what is maybe worth taking away from this is that we know like over the long term stocks have gone up, so you're talking about like a 10% long-term historical average for the stock market. So to get 12 months out, I think is actually showing like, okay, kind of lackluster forward-looking returns compared to usual. And, obviously to get these averages, you're going to have big drops, you're going to have big rallies. It's just kind of printing an average. So something to think about. And then one other thing here, I was going to show you if I can remember where I was going to go with this. Oh yes, I was going to look at sentiment analysis, put call ratio, just to check in on this, see what options flow is looking like. In terms of S&P 500, slightly more calls being bought here, but not at an extreme level, at least for now. And then one other chart to check just for the gold traders in the room. We're still kind of in neutral camp in terms of put to call ratio volume. By the way, just a quick plug. If you guys want a chance to win a copy of the Edge Finder, we're giving one away for free right now in our Telegram channel. We'll drop a link here to that Telegram if you want to check it out. Join. It's free to join. You might win a copy. Why not throw your name in the hat? And yeah, we'll leave that linked in the chat, or you can scan the QR code right above my head. Chris, how much do you think in terms of, I've seen people say, market sentiment is really bullish. I've seen people say people are worried out there. What do you think is a fair explanation of like, what's the crowd think about the stock market? I see some people who are hyped up on AI, other people who are like super paranoid about it.
Well, I mean, the paranoia would be around, is AI going to be so disruptive that it takes, everyone's job? Or is it going to be that it's so mandatory that you don't really have the skill set without AI? I think that's what people are nervous about, is like, this is a whole new embrace, like a whole new embracement of, we need to increase our skill set. We need to change everything of what we do on a daily basis. I'm watching a few of the the macro guys out there that have embraced AI in a pretty big way, and they're in their 50s, 60s. They're using AI. Some of them, you can tell, like, don't really enjoy the fact they have to use it, but they are. Some of them are using it like a glorified Google search. Others have like made it their sole purpose is like, I'm going to learn how to code. I'm going to learn how to do this. I'm going to talk to AI. Like, I think I mentioned the name before, but Jordy Visser, he's at, I think it's V22 now, and he's on with Anthony Pompliano and a couple others. He's all AI, and his whole like weekly video is just, he is in a car ride, he talks to Grok. He is, he's subscribed to probably 5 or 6 or 7 AI services, like full tilt. But I mean, the guy has like compelling cases. I will say, like, he's kind of on the spectrum of like, he's almost a little too bullish on AI, where I'm like, I get it. Like, you can be a stock picker and there's going to be some big winners and stuff, but those stocks will not last, in my opinion, over the next 5 or 10 years. I think that what we are ultimately going to see here and I know nobody maybe cares about 3, 5, 10 years out, but I do. 10 years from now, it's like, I can't tell you what the number one stock in the world is going to be, but I'm pretty sure it's not going to be NVIDIA, and it's probably not going to be the Mag 7. We're going to have some type of major disruption here. I think AI is making all this stuff happen faster. And also, we get to a point where, I mean, this year's political cycle with states pushing back on electricity costs. I mean, if oil prices go down, we continue to see this deflationary story, which I think is good for the U.S. especially. But if our electricity costs go up, if our insurance costs go up, if the cost of living goes up, like that's why people are paranoid and kind of pissed, is because, okay, you're asking us to embrace something that might just make us like worthless. I mean, what is our purpose if everything can be done by a machine? What's our purpose? It's like, does it get that extreme? That's very dystopian. So I can see that's where the worry is, but I think that you're going to lose jobs to not having a skill set to at least play around with AI, or at least be productive with AI. Companies are all in. Here's what I think I didn't talk to you about this, but word on the street as far as private equity, if you do not have a plan to go full in AI, you're not getting $1 in private equity. So if you want to go out there and pitch something, you better have AI in your pitch deck. You better have AI, front and center on what you're doing, or else you're not going to raise a single dollar out there. So that is where private equity is at. That is where the government is at. That is where this is a national security interest. So it's not something you want to fade. I'm not short AI. I just think that I have seen too many times here how many stock pickers you have and how many stocks can be great and they can run and they can just absolutely give all of it back. I don't want that type of volatility in my portfolio. So it's like, look, stick with the haystack, stick with the indexes, hopefully reduce a decent amount of volatility. And I don't mind. I never mind, the 5, 10, 20% swings in the index, because we can play a lot with those, but it's never fun to have a stock swing of 50, 60, 70%. And then you're thinking, this is a good chance to buy the dip. And that 70 becomes 90, right? That 70 becomes 90, 95, and then it's worthless. And you're like, the stock is never going to come back.
I'll tell you, Chris, where I kind of stop in terms of like longer term predictions. I think the Mag 7, like I'm talking about like stocks that I would buy and hold for a very long period of time. There's some companies that I really like the story and I might take a little bit of a longer term run on, but where I typically stop on the spectrum, right? You have like currencies and bonds, and you have whole stock market indices, then you have sector ETFs, then you have industry ETFs, then you have individual stocks. On that spectrum for longer term stuff, I typically stop at the industry level, because for me personally, my specialty is not picking the winner within an industry unless I have some huge understanding. I don't know that I can pick Zscaler better than Palo Alto, but I know I like cybersecurity, so I could buy the haystack, to your point. Now, it's not the whole index. It's not buying the entire tech sector, but cybersecurity to me seems like a more defensive tech, longer term area that personally I feel very convicted that over the longer term, cybersecurity is not going anywhere. Right? You're going to need more and more defense to defend all against the bad people that will use AI for bad reasons. So, that's just a taste of, for me, long term, the cyber ETF, or like buying the haystack. I also like medical devices longer term. I think that AI and surgeries could be done more medically through. So these are areas that I'm like themes that I could take a long-term prediction and feel that, if I get these things on a discount, I'll take the risk. That's personally not financial advice, just how I kind of approach investing.
Yeah. I don't mind taking some stabs, out to the end of this year, give myself lots of room for error on individual stocks. I think you've got to look at a lot of stocks this year as, put a probability cone out. If anybody trades options, especially, put out a probability cone, see what the market makers are planning for. I think I have a workspace here. Maybe this workspace. Let me go. I was just looking at CrowdStrike. Let's take a look at this one from a higher time frame. So if we go CrowdStrike, see if this will pop up. It should give me a probability cone, and I'm going to add some option trades. I want to be outside of that cone. Let me see if that pops up here with the overlay. Monthly. There.
Oh, that's
so
really
I mean,
cool
if you, right, you can see this is where price is at right here. You can see that it is kind of skewed to the upside versus the downside. So if I'm looking at, okay, Nick, I'm going to go out, this expiration takes us out into, May of this year. Well, if I went out further, kind of imagine this thing going a little bit lower. It's like, this is a good spot to say, I could put a trade out here.
Sure.
It'd be a very high probability trade. If I want to take some ownership of CrowdStrike, maybe that's not a bad spot. It's, could I own shares at 300? They're currently trading at 4 and change. Fair market value is like 460. So it's fairly priced. If CrowdStrike gets some love and we hit all-time highs, this trade pays, and it's an income trade. That's a lot safer than buying shares, wanting to see up. It's like, I don't want to depend on the market having to go higher to make money.
And that's a nice aspect of options too, is you can kind of like, all right, individual stock, but I'm going to strip out some of the volatility by selling out of the money. So I love it. I love it. Chris, we're out of time. You got to go. I got to go. Before we leave, thanks for coming on, doing NFP with me as always.
For sure.
Before we get out of here, for listeners, like I said earlier, we're giving away a copy of the Edge Finder. Don't miss your chance to join. All you got to do to join, click the link, join the Telegram. QR code is above my head. Join us in there. We're posting daily updates and ideas and clips from the stream, etc. So it's a great spot to be in anyways. And we are going to be doing a giveaway for copies of the Edge Finder here pretty soon. So Chris, thanks for coming on, man. We'll see you on the next one.
All right. Have a good weekend. See you soon.
See ya. Up next, we got Alan Perez coming in just after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey everyone, happy NFP day. Oh, look at that. This is new. Guys, look at the design going on here. Shout out Julie. This is the first time I'm seeing this one, the blue one. This is very, very clean. Hope everyone's having a great day, guys. It's NFP. Hope there's no blown accounts here. I'm going to talk about my perspective of it. I'm sure it's been covered here, so a lot of this might be a revisit here, but this is pretty much the same situation as last month, but just flip. So instead of a bad instead of good NFP, you have a miss in NFP, and then you have the unemployment rate actually improving there. So as far as the reaction goes, we did kind of have a mixed reaction here on the DXY. I think the real follow through will show on the next couple candles. The next, like maybe the 4-hour candle. Once it finished printing, then you will get some decision. Reason why I say this is that we're at a very important level, right? If I just draw this horizontal level here, this is a level of resistance. And then you're also meeting intersection with these 200-day and 50-day moving averages. So I think we can get if the DXY does go ahead and close above this, then perhaps we get somewhat of a pop. I don't think it's going to be a massive appreciation in the dollar, but perhaps it'll be an opportunity for us to get some good setups going against the dollar. And then if obviously we close below, then this is just another pullback into these moving averages, and then we just trade the thing lower. But at the end of the day, though, the Federal Reserve is looking to cut interest rates, and some other central banks are now positioning at holding or starting to kind of flip into rate hiking. So that's the underlying fundamentals behind that, and then that's what I'll be looking out for. As far as interest rate goes, CME Fed Watch tool still has 2 interest rate cuts for 2026, so nothing crazy, nothing changed there. This was actually, I'm seeing this for the first time change. About 15 minutes ago, this was an 88.9% chance that there was going to be a hold going into this month here. Now it's 97.2, so we're actually getting a little bit of a shift in there. But yeah, that's what's pretty much happened. We also did get some other news as far as Canada goes. So Canada's unemployment rate did kind of tick up there. The employment change ticked up for the better, but the unemployment rate ticked up for Canada as well. So kind of like what happened to us, but now it's happening to them. So yeah, that's super interesting there. As far as setups go, I'll go over that with you guys. But how's everything going? Eisen, remember DXY might tank if the Supreme Court rules. Yeah, so that's another thing we have to consider, right? I don't. So they're supposed to make a decision today or make an announcement today, but that could also get postponed. I believe it's tentative. I don't think it's solidified that they have to make some sort of a decision today. But yeah, sentiment and expectations have a lot to do with markets, of course, and how they trade. So we did get DXY get bid up here. So you saw like UJ, for example, was getting up into this level, very, very bought up. I think it didn't hit 158, but it was really, really close to that. So the expectation leading up into the release was very, very strong dollar. And so now that it's not as good as we thought, that's why you're getting this reaction here. But again, the follow through is going to show in the next 4 hours, 6 hours to come. Hey, Bashi, how's it going? So yeah, we'll see how it goes. As far as setups go, so in my personal opinion, if I'm being biased, I would like somewhat of appreciation into the dollar just because I'm waiting for this pullback. Oh, and I missed it. No, I didn't miss it. This is the zone that I had. This is the better one. I thought I missed it, but I have this charter alarm here, so it's going to let me know. I really like to pick up the Aussie dollar at this level here of support. The level right here that you're seeing that it's currently at, that it's also a level of support as well. So I could have, should have, would have got in there, but we'll see how it plays out. If DXY does get a little bit of a pop, then perhaps Aussie dollar gets a little bit of a dip, and then I can ultimately buy it at this level here that I really, really want to pick it up at. Right here on this 50-day moving average. So I have a charter alarm there. It'll be set off if I get what I want. But if not, then perhaps this level becomes a good one as well. You never know. All good. Been intraday lately. Okay, cool. As far as the Aussie dollar goes, it's now creeping back up here on the top setup. So getting a 6 bullish reading, which is great to see. You're seeing New Zealand dollar creep up as well. So let me go ahead and make this only majors. I'll just do this to make it easy for me. We were seeing that Aussie dollar, New Zealand dollar was actually fading off a tad. I think it's now creeping back up. Now you're seeing UJ and dollar CAD getting some bearish readings. So dollar CAD not so much yet, but dollar yen is. Dollar yen was actually a little bit higher earlier. So now we're kind of starting to see things move in their respective directions. So let's see, dollar CAD is a good one that I wanted to see actually trading. It's at this level. I actually might take this position, honestly. Yeah, this is very, very nice here. So I'm gonna write this down. So this was a level of resistance prior 1, 2, 3, 4, 5 times here, and then leading into 2025, we had the tariff announcements, right? It was originally Canada, Mexico, and China 25%, and so dollar CAD, or the Canadian dollar, really got beat up there, and this level of resistance did not hold. So we had this appreciation. Now we found our way back at these moving averages again. This yellow one is the 200-day, and the 50, or the red one is the 50-day moving averages. So I'm actually interested in picking this up. Maybe if we get something like, I'm going to put a chart alarm. This level call is calling me here. So if I'm going to do this for you guys. I'm going to delete this. If we get into here, I'm taking that. I'll take dollar CAD short. I like that idea. Move my charter alarm there. We'll see. We'll see if we get a little bit of a bid in the dollar, then this thing will obviously creep up into this level. Ultimately, what I want as well is Aussie dollar to take a little bit of a hit as well. So if I'm long Aussie dollar and short dollar CAD, it is a correlated position somewhat. So this will be half of the size that it usually is, and the Aussie dollar will also be half of the size that it usually is. That way, I am still within my parameters of just being one regular size, correlated in one direction, of course. Yeah, stress really. Yeah, USD CAD definitely a good option for me. I really like that trade actually. I was kind of neglecting it. I didn't like the chart, right? Especially when we were hanging out here, but starting to clean up a bit. I like that the moving averages and this level of resistance shows, and I also like that the edge finders is showing dollar CAD starting to weaken a bit. So we'll see. Let's see. Other things that we can go ahead and expect. Let's go ahead and look at interest rate projections if they change anything at all. Fundamental. Where are you at? It's going to be under economics. Am I missing it? There it is. Interest rate data. Another reason why, and I might sound like a broken record here, guys, but the reason why I really, really like Aussie dollar to the long side is because going into Q2 of 2026, we do have that interest rate relationship change. So the Aussie dollar right now at the moment is the lower yielding currency. Going into Q2 2026, the expectations are that Aussie dollar will actually become the higher yielding currency as they tend to hike the rate, and the US is expected to lower the rate, which is really, really good. So that's another reason why I'm really, really loving this trade. You can also see it being demonstrated at this bottom graph as well. Alan, gold 1 hour breakout. I'm actually interested to see how gold's reacting because the gold and dollar really, they tend to have that inverse relationship. So dollar, how's dollar doing? It's still up on the day, and we're still trading between these very important moving averages. Looking at gold. Gold's trading higher on this, so we'll see. Why is my chart? Okay. So gold's trading higher on this. So let's see what the bond market's doing. 10-year yield trading lower on the day. What's the 2-year yield doing? Where's it to? US2. This is, I don't want the ETF. Huh, what the heck? If I type in 2-year yield, no, it's usually US, the length, and then Y. Guys, am I missing something? Please let me know. Alan Sachs fifth filing bankruptcy. Yeah, I know. I gotta claim the little benefit that you get from it. It's like $50 or something, $75 every quarter. I'm telling you, the USA economy and is not as good as reports say. I don't know, ball out. Actually, what kind of surprised me about today, if you look within the ISM report, the actual nuances of it, the employment section within that actually improved. And I think, I mean, ISM, you can't argue the data here. Economic growth data, we go to services PMI is what I was talking about. It's trending higher. So I think it's improving. I personally think it's improving. I live in a very condensed area. And people are really out there. They're out there spending money. USO2. That's what I was doing. Come on, silly mistake. Let's see. The 2-year yield's gonna go ahead and track like your near-term interest rates. Awesome, trading lower as well. So we traded up into this 50-day moving average, is trading lower. But the DXY seems to be on the 1 hour chart. Let's see what's going. Yeah, so we'll see. It's still too early to tell. You're still trading within these. Again, you need a very obvious break above below, close, and then momentum following through with that to kind of get some direction. But until then, we're kind of just waiting. Markets are really dissecting. But I am seeing here on the right side of my screen, dollar yen is actually picking up here. So we're getting into that 158. If we break out here, then perhaps that momentum's really going to start to show, guys. Yeah, I was typing 2, not 02. So yeah, dollar yen's gonna pick up some steam here. You got to be very cautious though. That 158 going into this 160s. Once you pop into like 160, 162, then you do have that verbal intervention risk or direct intervention risk. And then you do get some like about 2-3% down move on the yen there. So we'll see how that plays out. As a swing trader, how many trades do you manage to cash per month? It's as far as like actual trades, it can be plenty, but as far as positions and campaigns of them, maybe not that much. And what I mean by that is usually when I have a trade, like for example, what I would tell you on dollar CAD here, when it gets down to making that decision if I'm going to place the trade or not, once we get into this level, I'll kind of just weigh what's going on, right? The fundamentals, what can happen if there's any like polarizing sentiment surrounding it. But if everything looks good and looks like it's going to be a good entry, which I think it is going to be, then I would just put out my levels, right? This to me is a really good level. But I always want to, mark up like the other premiums, and then also like a zone of mine that I'm like, once it breaks this, then it's clearly the trend is no longer intact. I'm just going to ditch the idea. For the most part, I always place a trade with a lower lot size, and then I build up into it. So then the actual number of trades increases at that point. But if I'm getting at a very discounted level, if I'm going to buy, then I can just go in with a decent size on that one position. Or if I'm getting at a premium price, if I'm going short, then I can just place the one position. But usually, like if I'll give you a good example, dollar Swiss. I'm going to take away this Fibonacci retracement level, but like this was a position where at the moment when I first got filled in, it wasn't a premium level or a discounted level by any means. And I was willing to go ahead and add to that. So this was like the level here. And then once we got into this level, I was looking to go ahead and buy into that, just because previously, like you see that whenever we tap into that, we get these wicks higher. But that didn't happen. So we actually stalled out here for some time, 1, 2, 3, 4, 5 days. And so that kind of made me hesitate on that idea. So at that point, I didn't want to add into a position because the probabilities of it continuing to the downside were there. So then that's when I, use discretion and I don't add to the position. I just keep the one on there. So it really depends a lot of what it is. And a lot of like the best traders, the big heavy hitters out there, a lot of what they do is systematic plus discretion based as well. So that's why I wouldn't do it. But in some instances, like I was ready to pick up here. I was expecting drawdown, and I was gonna pick it up again there, bring my average basis down, and then trade it higher. But because of that, just hanging out in this area, it made me hesitate. So, but nonetheless, it's still a good trade. It seems like if the dollar goes ahead and closes higher on that, on these moving averages, then perhaps we get a little bit of a pop, and then it's going to work to my benefit. So we'll see how it goes. Ooh, Max, is that what it is? Japan's, I can't pronounce her name, dissolving some house people. Okay, that's probably that uncertainty is probably playing into this dollar yen pop for sure. Thank you, Max. Appreciate it. The longest I've ever held a trade, 2 months maybe. It really depends. I try not to go in with an expectation, because one thing that I struggle with for sure is like if I'm in a trade for a very, very long time, sometimes I'm just like I'm just willing to cut it off, even if there's more upside potential, just because I don't want to have the position on for too long. It's very different in currencies, because in currencies over the long stretch, they're mean reverting, right? So eventually over time, it's going to take a catalyst or two to kind of mean revert that currency back to where it was in the midpoint, right? Versus on equities and metals, those are over the long stretch of time, they tend to drift up. So you have the more time is actually that you're in the trade, it actually works to your benefit. Versus in currencies, the longer the trade, the more at risk you are for a certain catalyst or something to kind of bring that trade back down. So that's my dilemma with currency trading, is that you have to be very mindful of the time horizon. But there are also some opportunities, right? Like back in the day, you could say, when dollar yen was the obvious trade where you can, it's the carry trade, the famous carry trade, where the time does work to your benefit, right? It's you know, the interest rate divergence is the spread was really wide, so it makes a lot of sense to hold this for as long as possible. Now the dynamics are shifting, so you have to be very mindful of that. You can't really do that with the euro dollar. If you look at the euro dollar, I'm just going to go ahead and just remove all of this here. If you look at the euro dollar, it mean reverts, right? Like look at this period here. I'm going to I'm going to highlight this so you guys can see what I'm talking about. Go ahead. So if you hold this trade for a long time, you're at risk of just getting caught in chop. So in the case of the euro dollar, it's more beneficial to wait for a discounted level if you want to trade it to the long side, or a premium level if you want to trade it to the short side, and then just be mindful of the fundamentals and things that could, you know, kind of help with that or deter it away. So that's kind of how I trade currencies, very high level there. Okay, so it seems like the dollar's still flat, nothing much happening. We'll see. I hope that made sense, guys. If you guys found sense in that, or you know, if I articulated that okay, please let me know. And if you want me to, you know, do more talk surrounding that, not just trade ideas, I would also be more than happy to do so. Ball outs at oil. Look at oil. This was a bearish trend line here that I had. Now, you know, trend lines are subjective to the individual, so don't take this with a grain of salt. Here, I'm going to make this easier to see for you guys. I'm going to make it red. Actually, we're going to make it, let's do pink. I like pink. Pink is a good color. This trend line here, so if we get a good close above here, I'm interested to see the follow through with that. Again, oil, very high level dynamics of it. If you get elevated oil and it stays elevated, that could be short-term inflationary pressures that could actually boost the dollar. And vice versa, right? If oil stays subdued for some time, that's going to trickle into the economy in a good way. You know, transportation, fuel costs, all that good stuff is going to decrease inflationary pressures in the U.S. And so that'll be very good or very bad for the U.S. dollar, very good for the Fed. So if you get high elevated oil, it stays there. Perhaps the Fed kind of sees that as a maybe potential for higher inflation in the very near term, and they decide to not move with interest rates. And you'll see that here with CME Fed Watch tool. So you just monitor this. So 95. So yeah, this thing is hovering around 88, 97 ish as far as no rate cuts. But this tool right here is really, really good for catching these like real time, you know, what the market's thinking as far as interest rates go. It's not pink, it's salmon. Yeah, right. I say pink, man. It's a good color. I like pink. Pink's pretty cool. I like my pink shirts. I have a few. So we'll see here. I'm gonna. What is this? Top setups compact. Oh, the simple. This is the simple. Okay, guys. Nick's always doing changes, guys. He's always not changes. He's always doing updates. So definitely copy, guys, an Edge Finder. I would highly recommend it. I started using this tool whenever I went independent trading, and it's definitely helped me so much. The tool has paid for itself many times over. So if you're thinking of getting it, or it's been on the top of your mind, you're kind of hesitating, take it from me. I really like the tool. It helps me a lot. And when you get the tool, I would also, you know, consider maybe bundling in with the Discord or join the Discord, right? No matter what. But when you get the tool, you have us. You have us as access. So I'm in the Discord all the time. If you have questions on stuff, you know, just at me in there, and I'll do my best to reply in the public chat. But definitely get you guys an Edge Finder. It's worth every single pretty penny. It will not go to waste, I promise you. And it's a one-time payment, so you're always getting updates for free. You know, Nick is always updating the thing. There's more updates to come, so it's really good. And also the Telegram channel as well. So definitely join that. It's completely free. I'll drop the link here in the chat. Trade like a tiger. Guys, the Edge Finder completely turned my trading results around for the better. Must have Brother, I agree with you, man. It's so the thing is with Edge Finder, right? Is you can do the task by yourself, but it's very time consuming and it's somewhat unrealistic. And then you put yourself in a position where you have the risk of human error, right? So if you're trading currencies, for example, you're trading currency pairs, so you're trading two at a time. So you're always trying to find out what's going on this side and on this side. And you have to do that data collection manually, and then finding a net positive or net negative outcome is time consuming. It's really, really hard. It's not. I wouldn't advise it. It'll, if anything, it'll make you not like trading. So this makes life easy. It makes you want to trade. It makes you like the fundamentals. It makes embracing fundamentals a lot easier. Also, join the Telegram channel. So I do my best to go at it, put some articles out there every now and then. This morning I did a must read before the news, kind of just prepping you guys on what's going on today, certain outcomes in the current narrative before the news. And then, of course, once my live segment's done, I'm going to go ahead and drop the 2 articles of the 2 biggest charts here. So Max, you gave me a great idea. I'm going to go ahead and look into the comment that you gave me as far as what's going on with the Bank of Japan dissolving something about the lower house there. So I'll go ahead and read into that, and I'll see if it's worth putting in there. But it seems like it's a good story because you are getting dollar yen get a little bit of a pop there. So Max, you made my life easy today, man. I appreciate you. Join the Telegram channel. It is completely free value to you. Seriously, I would highly recommend it. I do my very best to do a good job in there and keep you guys well informed. You look forward to read it? Thank you, sir. Thank you. All right, let's see what equities are doing. Flat on the day. I mean, as far as net change on the day is flat, but we are seeing the NASDAQ here on the 4-hour take a little bit of a dip in there. One thing I've noticed here going into 2026, it's only been a couple of days, but a lot of the other indexes are trading higher here. So you have this one, the Russell, which I know Nick's pretty happy about. He's had that campaign going. US 30 as well, but NASDAQ has been showing relative weakness. I think we're getting somewhat of a pivot, a sector pivot, right? NAS or AI and big tech. There's a little bit of skepticism there, so perhaps we're seeing that unfold there. So if you do get pressure on the equities, I think the NASDAQ will be the one to follow there, especially if we get a good close below this 50-day moving averages, then perhaps a good level of support. The one I have here is the 24,000 mark, but then you have the 200-day as well in yellow, and then below the 22 and beyond that. So these are the levels that I have. Again, technical analysis is very subjective to the individual, so take these levels with a grain of salt. But this is what I have on my eyes there. Let's see, Aussie dollar not yet falling. I really want to see it down at this level. This to me would be a discount level. The 660 level. You have the 50-day moving averages. Give me a break of this level, and I'd be more than happy to pick it up. Edge Finder showing a bullish reading there. That's like my go-to no-brainer trade when it comes to currencies. Currencies fundamentally they trade on interest rates, right? So the whole things in between interest rates, like what is NFP, what is CPI, what's the Fed saying, all of that work that we do, all of those data points that we monitor is to get the ultimate conclusion as to what interest rates are going to be. And so in the case of Aussie dollar, RBA is looking to hike rates and dollars looking to cut the rates. So that's the perfect scenario in my opinion there. Aussie dollar looking the same zone. Yeah, so I have a chart alarm here. This will be good. If this level holds, if dollar starts to pivot here off of these moving averages, these longer term moving averages, and this becomes more of a solidified area of resistance, then I can kind of start to see, okay, maybe this level just turns into a better zone relative to where we are at the moment. So we'll see. But ultimately, this is what I want to pick it up at. Dollar CAD 2, or this is not dollar CAD, this is dollar yen. Dollar CAD 2, looking to short it here because those two positions will be somewhat correlated in the sense of shorting the dollar. This will be half the size, and Aussie dollar will be half the size to make up for that full position size. My accountant friend told me I can write off the Edge Finder as a trading expense. Yeah, you can. I do that. Well, I did that. You can write off Edge Finder. You can write off the VIP Discord. You can write off other ones. So the more, the better. or you can save them. You can do one year, the other one the next. But yeah, definitely do it. Also, TradingView too. If you pay for TradingView, that's another anything trading related, education, all that good stuff. You can also write off your Wi-Fi in the US. You can also write off a portion of your office space in your home. But all right, guys, my time here is done. We do have Forex James coming on. He's been producing some pretty sick content. I'm not gonna lie. He did post a really good video this morning that I really enjoyed watching. So definitely check him out. You guys are in great hands. He is definitely a fan favorite. You can't dispute that. Again, join the Telegram channel, Cop and Edge Finder. You have all the resources to help you out here. I'm always available. But you guys have a blessed, fantastic rest of your day. And like always, trade safely, guys. Bye-bye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. How's everyone doing? Happy afternoon. We've just had the US markets open, so NASDAQ is slightly down. The S&P is not doing that much, to be honest with you. However, a little bit of choppy markets leading into NFP and unemployment that we had earlier. So in terms of price action today, it's been pretty miserable in terms of the opportunities that I've seen anyway. Also, I appreciate the intro that Alan gave to me. That was very kind of him. So if he's still watching, thanks, Alan. How's everyone doing? Bashi, Othamain, good to see you guys. Emotions going burr. Whose emotions are going burr? Sounds like the money printer. So New Zealand Swiss is getting a bullish score on the Edge Finder, macro only. Again, that's really all I pay attention to at the moment, as I don't account for sentiment too much. So New Zealand Swiss getting a score of 8, which is great. New Zealand US dollars getting a score of 8 also. Euro pound is still reading bullish, which is a little bit frustrating because I was stopped out of my long earlier in the month. CAD Swiss and Euro Swiss also getting bullish readings. Bearish, we've got pound CAD, dollar yen, Swiss yen, pound New Zealand, dollar CAD, Australian dollar CAD, pound Aussie, and pound yen also. So it seems like a little bit of sterling pressure. Seems like we're getting a little bit of a bullish reading on the yen as well. So that's interesting. We could take a look at that shortly. James, how bad was the snow your way? We had heavy snow for like 8 hours. We don't have any snow at the moment. I did have snow a few days ago, but it wasn't too much. It was maybe 1.5 inches of snow. But yeah, it doesn't. I don't leave my house, so it doesn't bother me either way. Tom, good to see you. Max, hello. I guess the market will not move before US court decision. Yeah, I mean, we've just had like the biggest news day of the year so far. Obviously, it was a pretty normal Friday news in terms of, NFP, unemployment, nothing too crazy, but it is the first one of the year. So I guess the markets were anticipating that. And again, it is Friday, so I wouldn't expect too much going forwards in the day. So let's have a look at some trades. What could we look at first? I guess we'll go New Zealand Swiss. That makes the most sense. We'll work top down. So what do we have here? I just need to change the template. Hold on. Okay, there we go. Now, already a little bit of a problem. The fact that this daily chart is absolutely melting. I mean, I'm not sure how many of you have the what's the right way of saying it? I guess let's say the confidence to try and buy a market like this, because I don't. No way. However, I suppose if you are a short-term trader, you might be able to find some opportunities on small pullbacks. But overall, I think this idea is already out of the window as far as I'm concerned, just because of that daily time frame. So I'm not even going to bother going any further because there is no way I can in good faith go over how to even attempt to buy that market. So I'll just move on to New Zealand US dollar. Do I already have that here? I did at one point. I might have removed it. I think I did. So New Zealand dollar, there we go. You can see the analysis is still there, and the idea hasn't changed. So we're actually in the potential entry zone, or the entry zone I was originally looking at. I've lost my, hold on, let me get my brush tool, a screen brush, so I can draw on the charts. Yeah, so here, this 50% retracement zone is what I was initially looking at. But as we spoke about, was it yesterday or the day before? The candle right here is a little bit spooky to me. Now, I'm not a huge candle analyst or a technical expert by any means. I don't really find that very useful. However, when we do have large impulsive candles like this, it's not uncommon to see them get corrected. So I am a little bit cautious that we could come slightly lower, potentially double bottom here, and then maybe see some sort of retracement back to the upside. So I'm not actually interested in buying this market, but technically the setup is valid. We are in an uptrend, although again, it does look like we might be coming into a bit of an inflection point here, where we actually see the moving averages cross back into a downtrend. So again, not ideal, but there is a little bit of an idea there that could be played on. Nikkei's going crazy. Is it? Let's see. Again, I'm not sure if I've got it listed here. Yes, I do. Yes, it's having a very nice day, actually. Let's see what's going on lower time frames. Yeah, just a big bullish candle there, isn't it? I'm not sure why. I'm not sure what's driven this. It might have been US news, but yeah, I'm not sure. I don't really keep up with the Nikkei too much. Well, at the moment anyway. James, the snow is bad all around Midlands. Brum got hit hard as well. Yeah, it was weird. I woke up and it was just white. It seemed to have just come out of nowhere. I cannot make the Elite Traders link from your channel to work. I'm not sure what you mean. Do you mean the link to the website, or do you mean the link to the YouTube? I'm not sure which link. What do you think about dollar yen? Dollar yen is interesting. So I think we're in a position on dollar yen where, although the edge find is giving us a bearish reading, I would still actually be very happy to buy. However, I wouldn't be buying yet. So if we zoom out here, we're in a very, very clear sort of technical resistance level. Obviously, previous high, we've rejected this level twice already, and we're coming back into it. We could, very well easily could come back up to the previous high here, around 160, but I would like to see us come back down, sort of create a new low here, a little bit of a support around 150, and then potentially continue higher, because I think we are a little bit too deviated from our 200 moving average. We've had a large run to the upside, and we've still got the gap here from the election. So yeah, there's no way I would be buying dollar yen just yet. I think, again, short-term traders might be able to catch a really nice breakout trade here if we do break out. But I'm not really interested in that, again, for the reasons I've just said. So I think, yeah, if we can come down towards 150, I'd quite happily buy dollar yen, to be honest. I think the yen is going to remain a funding currency regardless of the recent hikes that we've had. Yeah, I just don't see any reasonable argument for yen bulls at the moment anyway. Things could change. Again, the markets are ever evolving, but right now, yeah, that's not on my bingo card. Oh, right. Something happened. I must have missed it. So what was that headline? Considers dissolving lower house. Okay, I'll have to look into that after the stream. What's your thoughts on Aussie US dollar? Good question. So let's just see actually what's on the edge find for that one. Slightly bullish reading with 2, not great, but it is a little bit of a bias. Now, as soon as we're talking about the dollar, I should disclose that I've actually gone long on the dollar on a weekly time frame. This isn't a short-term play. This is more of a multi-month potential idea, but it's very, very small. So even if we come down towards 90, so if the dollar decreases by $10, I'll lose 1%. That's how small the position is. It's really, really insignificant. But it is just a little bit of a play to see. However, the situation right now, I could see the Aussie dollar being a pretty good buy. However, with today's data being quite stable, NFP did come down slightly, but we saw good unemployment and we did see good hourly or average earnings. So I think that was a little bit of a support. I wouldn't say today's news really swayed either way in terms of being, or pivoting the Fed super hawkish, dovish. I think it was relatively flat in terms of the overall impact, in my opinion. So that leads us then onto the central banks. The RBA, Australia had higher inflation, which obviously a check in that box of the RBA holding or maybe even hiking. I'm not going to say hiking just yet, but holding, which is a potential divergence there with the Fed. So there is that idea, but what we've also got to account for is the CME FedWatch tool is completely pricing in, or almost completely pricing in, a hold by the Fed in the next meeting. So yeah, to me, it's not super high probability, but it might be worth taking a little position on to see if we can come down to some key levels. So if we could see this level come into place, where would that be? Around 66. Let's just call it 66 for argument's sake. So that would lead us into around this area, come and meet the 200 moving average. Really nice rejection off here, then continue to the upside. I think that's sort of the easiest approach to that trade. But yeah, again, I wouldn't say it's a super high probability trade just yet anyway. James, down 2%, down 2% week as a intraday trader. How so? What have you been doing to be down 2%? Although 2% in a week, it's not a huge deal. I wouldn't say that's anything to worry about. I haven't traded in so long. Christmas messed up my sleeping pattern. Yeah, I mean, to be honest, it's taken me, or it did take me a while to get back in the flow of the markets. It took me about a week just to catch up and feel comfortable in the markets again. Why is bro still using MAs? Why are you not using MAs? What type what type of question is that? If you can expand on the question, you're saying like they've been patched or has been updating the markets or something. Okay, only looking for UJ and GJ. Interesting. What longs or shorts, Bashi? I think GJ could also be a good buy. I think yen pairs, dollar yen, pound yen, etc. all pretty simple. It's just buy dips essentially. Unfortunately, I haven't done that, which is regrettable. But yeah, the Nikkei, where's that gone? Here. Yeah, really, really big move there. It's a shame because I was long on the Nikkei all the way back here, and I was looking for 50,000. Or was it? Yeah, it was further back, but I was looking for 50K. But I ended up closing it early, and that was a big mistake by the looks of it. I mean, yeah, that could have been a huge trade. Good major, James. I swear today's first. I woke up at 6 a.m. without being dead. Yeah, I mean, I don't have a problem with sleep. I'm not. Yeah, I don't need that much sleep. But yeah, it was just the mental process of coming back into the markets. It took me a bit longer than normal. Hi James, can you tell us your take on euro dollar? Yep. So euro dollar, in my opinion, is due for a little bit of a pullback here. Let me just go to the daily, work our way down. So what I'm seeing here on the daily is a very nice 200 daily moving average come into play, higher lows here. So obviously, low, higher low, and potentially the next higher low here. Considering we've also got lower timeframes that are a little bit extended, in my opinion now. H4 is looking like it's just been sold off completely, all the way down to the H1. It's just looking a little bit technically oversold. And down here on the H1, we've also corrected this candle. It's the same thing we spoke about on New Zealand US dollar. Do you remember I was talking about these impulsive candles that do tend to get corrected? It's the same thing. We've just had this on euro dollar here. So if you are bullish, so if you're obviously bearish on the dollar, you're bullish on the euro, I think maybe looking for some long positions in the next couple of days might be reasonable. What we've also got is this level sort of coming into play as well. So it's not super clean, but it is something we could work from. But yeah. Hold on, sorry. There we go. But yeah, as I said, I'm not really super bullish or super bearish on the dollar. I think technically we could see a bit more of a retracement to the upside. I am getting very sort of compelled just by the technical setup that we've got. I think it's too, what's the word? It's sort of too historical, I guess is the right word, to ignore. I mean, I could be wrong. You know, I'm not saying this is a guaranteed play, but it is something that I'm willing to put some money on just to test and just to see. But yeah, in terms of euro dollar, I think longs make more sense than shorts, especially if we consider the heat map. Where's it gone? Is it economic data? No, fundamental analysis, heat maps. There we go. So the US dollar has actually popped up from today's news. I think yesterday it was around 30, currently at 45.5, which is, again, a little bit of an increase from yesterday, which is quite nice. But the euro is sitting at 66.7. So purely from a from the heat map perspective, euro dollar longs are in play. But yeah, I wouldn't be willing to buy it here. Let me just clarify. Hold on, let me just catch up with the chat. Bear with me. Gold. Okay, we can have a look at gold in a moment. Not directly exposed to Nikkei, but have Asian ETF, so good to see. Fantastic. I don't think I'm not invested in Asia at all. I'm completely out of Asia, which is a bit of a shame because I think Asia is a huge opportunity. Places like China, India, I think we could see massive potential there over the coming years. I mean, China's huge already, but I think it's still undercapitalized, if that's the right word, or under-recognized maybe, especially in the West, is what I'm saying. For me, it's actually sleeping. Egg USD outlook. Egg prices will drop, maybe. You know, I'll just buy some chickens. I'll flood the market to lower the prices for you. Hopefully next week I'll be as good. I want to start trading again. Yeah, fair enough. Still DCing silver? Not yet. I'm a little bit annoyed. Not annoyed. Maybe that's not the right word. Where is silver? Here. Yeah, I'm a little bit sort of perplexed on what to do. Maybe that's the right word, because I am very bullish on silver. I definitely see 100 coming into play at some point. By this year, I would say 100 will have either been hit or is going to get hit, you know, very quick, very soon. So that leads me to obviously wanting to be in buys, but I can't justify buying it here. It's just a bit too high. Now, you know, it could be like a gold situation where we look back in 5 years and we look back at, what is it now, like 80, and say, wow, that's so cheap, such a discount, everyone should have been buying. But realistically, if it doesn't, and we do see a drop like what we've seen historically on silver, so like, you know, here when we had a big run, and then we just consolidate and drop. Same thing here. We have a big run, have a little bit of a sort of consolidation period, and then we just drop off. I don't want to be caught in the same thing in a DCA position because I could do the same thing where it's, you know, small sizing, buying incrementally, no problem, but it's more the duration of that trade, not the actual loss. So yes, sure, I could theoretically buy it here, buy it here, buy it here, buy it here. But then what if it does that where it just range bound movements for the next 2, 3, 4, 5 years? All I'm going to be doing is losing money on swaps or commissions and fees for overnight fees and obviously being a drawdown. So right now, I don't see any benefit to buying it. When I did buy it initially, when was it last month, I did really still see some upside, but it's just the price action here is a little bit ugly for me. Gold is a different story. However, I think gold is from a price action view, gold is much cleaner because we are very clearly seeing the momentum here. Obviously, high, and potentially this is going to form a new high. Also following the 50-day moving average very, very nicely. So I wouldn't DCA gold. However, I think any opportunity to go long on lower timeframes, whether it be H1, H4, daily, if that's what you trade, I think is completely justified. Now, in terms of actually getting an entry on gold. We could be looking for potential rejection off this double top. Maybe that would provide a little bit of a pullback for us to get in. Beyond that, we could also be looking for a break, retest, and continue higher. Either way, I think as long as your sizing is fine, you should be okay. I think, well, what was it? I can't remember who it was. There was an institution or a bank that put a forecast out of 5,000 on gold by the end of the year. I mean, the forecasts that they make are often way too conservative. So I remember last year, there was forecasts, I think it was 3,500, and we ended the year towards 4,000. So yeah, the bank forecasts are often either terribly off or way too conservative. Obviously, I'm not saying they should get them to the dollar, but you know, within that area would be a lot better. Okay, let's see. So that was the answer on silver. 2% down is pretty normal. It is. You keep saying this, Ray Beast, but you're not giving me really any context. But either way, yeah, 2%, I would say, generally speaking, is completely fine. As long as you're not risking, like, you know, 0.1 per trade and you've ended up down 2%, that would be pretty tragic. We all know he's going to be Trump puppet. Oh, are you talking about the new Fed chair? Yes, obviously. We don't look at the drawdown. We keep doing our job and let the edge work. I suppose, yeah, again, generally speaking, that's quite true. Dollar Swiss is looking, Dollar Swiss long is looking good. Let's see. I'm not sure I've got Dollar Swiss on my list. I don't think I do. Oh, I don't even have it on here, which is weird. Let me add it. Hold on. Yeah, there we go. Yes, it is looking very good, actually. The Swiss on the heat map wasn't looking too convincing last time I checked. Hold on, what were we just looking at? Was it dollar Swiss? Yes. So as we can see, Swiss 16.67, US dollar, as we said earlier, is at 45.45. So in terms of, again, the heat map readings alone, dollar Swiss is a great buy to hold. Now, the price action is really ugly when you zoom out. So if you were buying sort of the lows around here, buying off supports, completely fine. That's actually a really, really good point to buy. The problem is when we start approaching these highs, are we going to end up back in this sort of range and just ping pong up and down, or are we going to get a breakout finally? Obviously, it really depends on, you know, future Fed meetings, future data releases, etc. But if you're already in and you're in profit, I think it might be worth just buy and hold, because you might be able to get a really, really nice runner potentially. So yeah. Drop time frames, tighten risk. This is the way. Yeah, I suppose it depends on the strategy. A couple of months ago, we were laughing at the comment from Trump. He wants to call the fluff of Mexico Gulf of America. When I open Google Maps 2026, it says Gulf of America. Yeah. James, did you check dollar yen? Do you know what's affecting exactly? It was something to do with the prime minister over there did something. I'm not sure. Let me try and find the headline. Just bear with me. Where is it? I actually can't find it. Having a quick look. Yeah, I'm not sure. I'll have to figure it out off stream when I'm done. But yeah. Oh, drop timeframes on silver. Yeah, I suppose you could go in for some lower time frame trades, but I don't really want to do that on silver anyway, because I have such a large target and it's so far away from the current price. I would rather just establish a base of DCA positions and then let it run rather than having to keep getting in and out, because that's just going to add more work on for no reason. But it might be the only way to do it. Either way, we'll assess when that time comes. Euro Swiss long. Let's see. Yeah, I mean, again, just referring back to the heat maps, it makes complete sense. I'm not sure. Let me just see what the central banks are doing for each currency. So the ECB holds rates at 2. Inflation is targets, data dependent stance. So it's relatively neutral from the ECB. Swiss National Bank is holding rates at 0. So they're also quite neutral as well. So there's no central bank divergence between Euro Swiss right now. However, we then are looking at the fundamentals, and the fundamentals are bullish. So I would like to see a little bit of a breakout of this, small range that we're in, reestablish a bullish trend, see these moving averages cross, and again, establish that bullish trend. Then maybe it might be a long position off here. We could also see the retest of these highs. That'd be quite nice. But for now, I don't really see anything. It's weird. I keep sitting here and feeling like I'm not doing anything. It's like I've not got really any positions going. I don't really have any trade ideas. I'm really, really flat right now. And then I'll look up and realize that we're only 9 days into the year. We're 9 days in, and I'm worried about not having any positions open, or having any meaningful positions open. So yeah, I mean, I'm quite happy really to just sit and not do anything until there's something to actually make a move on. Shells, hello. Yeah, there you go. Bashi's putting the headlines in. Doing nothing is doing something. I agree to a certain extent, but also no, because the way, I mean, that's the luxury of being a retail trader, is that we can theoretically sit and do nothing. But I always like to have capital in the markets, whether it be a long-term position, whether it's just scalping, whatever it may be. I want my capital working as much as possible. Obviously, when I say that, I don't mean with gambles or anything stupid, which is why I'm not having anything on right now, really. But the way I see it is, why have money in there? If I'm not going to plan to do anything, I may as well withdraw it, put it in the S&P, then withdraw it from the S&P and put it back in trading when there is something, which is obviously a hassle. I don't want to do that. Again, that's not a blanket statement. That's more of a one viewpoint. There is obviously an argument against that, which is also completely valid. What expectations of inflation next week? Let me see. I've got about 3 minutes left, so I'll see what the forecast is for next week. Are you talking about the dollar? I'm going to assume you're talking about US news. Hold on. I need to pull up next week. Or actually, you know what's better? I'm not going to do that because it's going to take me a while to try and find it. You can do it. Go on Forex Factory and find out what the forecast is, and that's your answer. One trade can make up a month's worth of sitting. That is also true. I mean, the thing is, I put this on Twitter the other day because I really caught myself slipping, actually, because I had a great November, great December. I've had a really good start to January as well. I lost... What was it? I made 2.7% on a trade, then lost 1.7%. I was sat there and I was really annoyed. And I was like, hold on a minute. I'm just, I'm up 1% on the day. What am I actually annoyed about? And I realized that because I'd had such a good run over the past 3 months, I let that start changing my expectations. And I think that's kind of what's going on. I'm just frustrated that there's nothing really for me to capitalize on at the minute. Anyway, pound dollar falls, breaking knee Trump might attack Iran. It's 2.7% unchanged on Forex Factory. Well, yeah, there you go. So yeah, the only thing I've really got going is this dollar long. I'll probably scale into this if we see something decisive, whether it be Fed or some more news, something that is going to solidify the dollar to continue to run higher. I'd be quite happy to scale into dollar longs. I just want to clarify, it's dollar basket longs, not raw dollar longs. I've also got pound Swiss that's still running. I'm going to try to trade out of this. because, to be honest, this is no longer a trade I want to sit in. But I'm not going to just realize the loss. I'm going to try to trade out of it. When I say I'm not going to realize the loss and try and trade out of it, what I mean by that is trying to minimize the loss, minimize the impact by offsetting it, not obviously holding and hoping. There's a big difference between both of those. Oil will go up. Okay, guys, I've got 20 seconds left, so I'm going to bid you farewell. Have a great rest of your days. Have a great weekend. Thank you all for being here, and I will see you all next week. Stay safe, don't get margin called, and I'll see you very soon. You got Marco coming on next, so don't leave. You're in great hands with Marco.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. I hope everyone is doing well. So, close my silver. If you're in the A1 Discord, you would have gotten the update. I closed it right now, like 2 minutes ago, for a 0.4% loss, or R loss, reward to risk. Again, didn't take the full stop loss, decided to get out, just cut the position. The BCOM rebalancing was yesterday, so that was supposed to be all of the big indexers. Just a second. That was supposed to be all of the big indexers selling a bunch of their silver positions to get back to a sort of target weight for silver in their portfolio, because they started silver with, let's say, 4.5% of their portfolio. And they ended silver with, let's say, 9% of their portfolio, because silver massively appreciated in 2025. So they need to sell the extra silver, and they're doing it in January. But so far, it isn't having a big impact on the actual markets. So that is not great. Also, risk off. We have US Venezuela. We have US and Russian oil tankers. We have US and Iran. That's all risk off. That all creates uncertainty. Problematic for being short on silver. I would much rather be long, not on silver, but on gold. So I'm actually looking for potential buy positions on gold. The last one I had was on the 30th of December. Got taken out by a couple of points. Price decided to go up in the end. So trying to re-enter. Possibly get an entry around the 20 EMA. So silver, I'm out. UJ, I'm closely watching. UJ, I'm closely watching. My alert has been activated. If you have been following my streams, you would have known that I was actively watching for USD JPY right above the 158 area. So now we are in a very, very problematic zone where we could see a lot of selling pressure come in because of a possible BOJ intervention. The latest explosion to the upside on UJ is because Japan's Takaishi, I think it's Prime Minister Takaishi, considers dissolving lower house. Okay, so political news seems to be very bearish for the yen. Takaishi is a dove. So he is actually bearish for the yen, which made UJ fly higher. Now the danger zone is this area right here, 158 to, I would say, 161. Okay. That is the level where we could get an intervention. Last time we got an intervention, we had a massive meltdown, massive sell-off. So I'm actually considering getting in on a sell setup, depending on the commentary from the BOJ. So I'll be looking at the statements. I'll be looking at financial juice, breaking news. And if we get some statements about a possible intervention, I think it's a good play to try and go short. So it could be a good play to try and take a short position, targeting possibly the bottom of this range. So if you do your back testing, you would notice the immediate reaction after a BOJ intervention is around 2 to 3%. So UJ moves 2 to 3% after an intervention, which is exactly what I'm targeting here. So around a 2.3% move, let's say. Now I'm not going to enter right now. Again, waiting for the commentary, waiting to see what the BOJ actually thinks, waiting to see any statements about a possible intervention. The last statement we had was, let's find it, Japanese Finance Minister Katayama, we have a free hand to take bold action on the yen. So that was the last time that they had commentary about a possible intervention. That was on December 22nd. So I'm looking for another sentence like this. If we get another statement like this, game on. Okay, game on, sell, UJ, most likely intervention is coming. Aim for these lows and positive reward to risk. Pretty high win rate in my opinion. I don't think just a second. I don't think that the BOJ will actually let UJ go above 159 or 160. So I don't think that we're going to do this. I don't see that happening. Okay. So that's of a lot of interest. Has a yellow flag. Usually when I'm in a position, I have a green flag. When I'm looking for a position, I have a yellow flag in, right? So NZUSD I got taken out of. So this is now closed. I got taken out for a reduced risk loss. Now it's not a full loss. It's like, I think minus 0.4 R or minus 0.4%. Maybe I should have taken profits here. But again, my game plan is to use a trailing stop loss and to capture the most of a move. So the game plan was to see NZUSD appreciate and just move my stops below the swing lows. But out of this position, so that's now closed. Aussie dollar. Aussie dollar is, I have this new thing with my mouse where I have sort of a zoom function, a highlight function. So let me know if you can see it in the actual live stream. So the Aussie dollar is retracing as well. I do have a stop loss in place. So even if I do get taken out, it would be for a profit. But again, we were running some much more decent profit or much higher profits. So unfortunately, we have started to retrace. The dollar gaining value definitely does not help my case. So DXY seems to be flying higher, and it's pretty bad for my dollar long positions, part of the game. So for now, the only position I have open currently is Aussie dollar. Stop loss is at 0.66557, trailing stop loss. Pound Aussie, I'm looking to sell potentially. Let me check the reading on the Edge Finder. And by the way, I'll be doing a DNA funded account giveaway on the stream. Let me just prepare for that. So DNA funded account giveaway, make sure you are staying for the live stream, because in, I would say, 5 or 6 minutes, I will be giving out a free code for a 10K one-phase account on DNA funded. Okay, so make sure you stay present on the stream. Pound Aussie, bearish reading, -6. That's good. That's a great confluence. I would like to sell this, but I'm looking for a technical confirmation. I definitely need a breakout of support first. So I definitely need a breakout lower out of this support level, and then it's game on to look for sell setups, possibly around the 20 MA as well. If we can kind of break the support and retest the support, get close to the 20 MA, that's pretty good. That's pretty high probability in my book. So that's what I'm watching. And that's about it for my whole watch list. So I'm going to remove NZUSD from the watch list. Silver, I'm going to remove as well. Actually, let's do it right now. And I can move this one later. So NFP was today, something I definitely need to comment on. Also, the CAD employment was today. CAD employment looks great, but the unemployment goes up. Employment change goes up as well, much higher than the forecast. Let's see the reaction on USD CAD. USD CAD, what happened there? Definite appreciation. So it looks like the market did not take this as a bullish thing for the CAD because the unemployment definitely went higher. Let me see that again. So from 6.5 to 6.8, that's really bad. If you have been watching my streams, you would know. Let's just see data, fundamental economic, CAD economic. You would know that I was looking for possible buy setups on the CAD. Now with this employment data and with the GDP growth, which hasn't been stellar, I am not so hot. I'm not so keen to look for longs on the CAD or shorts on the dollar, especially. I mean, the dollar just seems to be catching a bid. So the dollar seems to be getting stronger and stronger. I'm leaving the CAD alone for now. I don't think the CAD is the right thing to play at the moment. So that was the CAD news. And then we had the NFP and the unemployment rate. NFP came in lower than the forecast, lower than the previous number. We had some revisions as well. How can I get the revisions? Is it here? Unemployment rate went lower, which is good, but I would say it's a bit mixed. The whole event was a bit mixed and actually interpreted bullish for the dollar. I'm guessing the market mostly looked at the unemployment rate, which fell from 4.6 to 4.4. Let's see it on the Edge Finder as well. So fundamental. Oh, that was the jobs market, labor, NFP. No, sorry, the unemployment. For the US, okay, we should get a print on the Edge Finder soon, but the last number was 4.6. Now we're back to 4.4. That's pretty good. And definitely the market took it as bullish dollar. So possible lower rate cuts. There is a high chance of no cut in the January meetings. So if you jump onto the Fed Watch tool, if you take a look at this one, you would see January, pretty much we're going to stay the same. But for 2026, we still have 2 rate cuts priced in of 25 basis points. So that is still priced into the markets. Yeah, looks like it's a bit more hawkish than expected. The jobs market seems to be doing a bit better than people expect. So the dollar is flying off of that news. Pretty interesting stuff. I was a bit short on the dollar, not massively short, not calling for a massive crash. This makes me flip a bit. So this makes me a bit concerned about my dollar short position. I'm not a bull. Definitely haven't flipped into the bullish camp, but I cannot ignore this recent bid on the DXY. I cannot ignore NZD/USD stopping me out, Aussie dollar melting lower as well. It's most likely going to hit. So Aussie dollar is most likely going to hit the trailing stop loss. That's okay. It's still a profit. But maybe being short on the USD is not such a popular position anymore. Now, time for the code. So what I recommend you do for this segment is go to DNA Funded and go to the checkout page where you need to input the code. So DNA Funded. Go to the website, checkout page. Again, it's a 10K one-phase account. That's what we have for today for the free account. So let me copy it. Let's copy the code. I'm going to paste it into my trading view. This is it. So fastest hands, get the free challenge. If you got it, put it in the comment section so that we know that someone actually did grab the code. And also, if you're looking to get funded, if you're looking to expand your trading capital, DNA Funded offers a 25% off discount through A1 Trading. So we have a code for you, A1 Live. And this code is 25% off any DNA funded challenge. So DNA funded, great prop firm, reliable company, ran by professionals. There's a big broker behind it, and it's a direct competitor to FTMO, 5%ers, E8 markets. But what makes it the most attractive is the pricing. So with this code, you get a really, really good price. Okay. Now, this is my personal funded account. So past phase 1, past phase 2, funded stage. Okay, funded stage in drawdown. Unfortunately, I have 2 trades open. Buy on the SPX, sell on GU. And we have some profit running, but still in drawdown. So I'm trying to climb out of this drawdown. Of course, the goal is to get a payout. And by the way, this challenge is completely traded by ChatGPT. So I'm totally relying on ChatGPT signals to trade this particular challenge. DNA funded, check it out if you want. 25% off, A1 live. And now let's get back to the stream. Time for the comments. So let me open up my comments on the side. Ciao Papi won the giveaway. Awesome, congratulations. Enjoy the account. And yeah, I have more accounts to give away. We still have, I think, let me count. 11 more accounts to give away. Yeah. No, sorry, 10 more accounts to give away. So I'll be giving away an account on every single stream. So next week, I'll be live streaming every single day. 1 account per day, 5 accounts next week. Okay, so make sure you join. You can find my segment because the giveaways will be only done on my segment. You can find my schedule here. So A1 live stream schedule, this is it. So basically you can see today, 10 a.m. Eastern Standard Time. Comments, let's see the comments. My bum is numb from sitting. Gonna go get lunch. What is lunch? I'm guessing lunch. I feel you. Hello, Bashi. The Supreme Court will not rule in the Trump tariffs case today. Why not? Yeah, I was waiting for that. So today the big news was first the NFP. Second, you had the US Supreme Court ruling on the tariffs. Looks like it's delayed, at least Bashi says so. I'm going to need to check on that. Marco, is 2% down week okay? Yeah, I think it is. I think it's totally fine. 2% is nothing for a drawdown. I think my biggest drawdown was 20-something%. So 2% is nothing. Most traders have like 10-20% drawdown exactly. So Bashi knows what's up. 10-20% drawdown is kind of the highest level, maybe 25, but 2% is nothing to be concerned about if you have a profitable edge. 2% is some people's daily drawdown. It is actually. Have you ever blown an account, Marco? If you're talking about the personal account, I've never blown a personal account. Actually, I have. So when I was trading crypto, I think it was 7 years ago when I was a total noob in the crypto market, I put in 300 or 400 euros into a crypto account and I blew the whole account. So I lost the whole 300, 400 euros. I've not blown a trading account since then, but I have blown challenge accounts. So prop firm accounts, that happened multiple times, part of the game. No rule off on the tariff. That's unfortunate. I was definitely waiting for the ruling on the Trump tariffs. Why did Japan index go up so much today? I'm guessing because of the breaking news. Let's see Nikkei. Nikkei didn't really go up today. What did go up was USD JPY, and that was because Takaishi, the prime minister, is super dovish. Japan's Takaishi considers dissolving the lower house. Okay, that was interpreted as super bearish for the yen. AUD/USD short. Well, this is definitely a good day to be short on AU. Not gonna lie. DXY to 95. DXY. Unfortunately, nowhere close to 95. So I know Ballout would love to see it go to 95, but it just doesn't want to go to 95. Do you have IB contracts? Not sure what you mean. I do have an Interactive Brokers account, but I'm not sure if that's what you mean. What is the criteria you're using to give these accounts? No criteria, it's just the fastest hands get the account. So I copy the code from my document, I paste it into TradingView, you guys see the code. The fastest hands that use the code get the free challenge. My biggest drawdown was 8%, still passed the account. Yeah, I've had those cases as well. I was in deep drawdown, but in the end, I pulled through and actually passed the account. I think I can show you maybe on these, on phase 1 here. Nah. Yeah, here, I mean, look, the drawdown was pretty significant in December, or in September, sorry. Pretty significant drawdown, and managed to climb back out. And then again, drawdown. For the phase 2, it was just kind of a straight shot to the upside. So it was just a couple of winning trades, but now also struggling for the for the funded stage. Pretty deep drawdown. We're gonna see if I'll manage to climb out of it. JP 2025, JP 225. Actually flying. Okay, so possibly a very dovish reaction, bullish for the Nikkei and bullish for USD JPY, bullish for the dollar, bearish for the yen. So it looks like this news was interpreted as super dovish. That is the logical explanation. This is it. Okay, you can see January 9th. What is it? An hour ago, this print happened. So definite explosion in the Nikkei. What news platform did you use for that news on UJ? It is Financial Juice. Totally free, by the way. So Financial Juice, I usually focus on the Forex news and I look at the things in red. So I look at the prints in red. And then I also look at market moving. If something is extremely important, you're going to see it in the market moving news because it's going to move the markets. I think it's self-explanatory. I have not tried DNA before. Is it good with rules? Only FTMO? I would recommend DNA. So I've had no issues so far. I'm a swing trader. I take maybe 4 to 6 positions per month. So far, didn't have any issues. We'll see how it goes, but I would recommend them. And again, A1 Live gets you 25% off. And with that discount code, you definitely get the best price. If you look at all of the reliable prop firms, this gets you the best price out of all of them. Anyone has experience on trading NASDAQ? Does it respect price action strategies like supply and demand? I mean, a very simple strategy is buying the dip. So looking at the NAS, buying the dips around the 20 MA. So let's say here. Buying the dip is a pretty powerful strategy and a pretty easy one as well. If you want to get trade signals, Nick goes heavy on the US indices and he's pretty profitable. You can join the A1 Discord. Link is in the description of the video, and you can use my code Marco, which gets you 25% off on the A1 Discord. So you get signals from Nick, Iwind, Chris Pulver, and me. And Nick has been on fire in 2025 with buying gold and with buying the NAS and the S&P and some other US indices. So definitely would have made just 10 or 15 to 20% just by following Nick's signals on gold and on the NAS. Gold break the ATH tonight? It could. So it could, looking at gold. I mean, we're pretty close. We are getting really, really close to the ATH all-time high. Could it happen tonight? Because it's Friday, I don't think it's going to happen. The general situation in the world, though, is pretty risk-off. Let's see how silver is doing. So silver is continuing the pump higher. But gold seems very bullish. I believe it's going to continue to be bullish, continue climbing higher, and I'm looking to buy. I want to get in. I want to get in on a pullback around the 20 EMA preferably, and then it's game on to try and take a stab at this. So this uptrend, there's no sign of stopping. If the uncertainty continues, if the conflict, the drama continues with US, Venezuela, Iran, oil tankers, Trump going crazy, game on for gold. You know, gold loves it. And I've been reading some analysis, I've been reading some forecasts, and people seem to be very, very bullish. Like good traders that have been trading for 10, 15, 20 years, they are bullish on gold. This is for 2026. They're bullish on gold, bullish on silver, kind of bearish on crypto, unless we can climb back above 100K. Bearish on oil, which is interesting. So bearish on oil because with Venezuela, the supply is going to increase. What happens when the supply increases? Well, prices should go lower. And also, they are actually short-term bearish on the NASDAQ, bearish on AI for 2026. So the general topic, the general theme is that has been massive spending, massive overspending, massive debt to invest into AI, and that it's going to backfire in 2026 or 2027, but then pay off later. So they're going to massively increase the infrastructure while the demand is not really going to climb higher to follow the infrastructure, to follow the massive spending. So it's going to take a few years for the real demand to catch up to all of the build-outs of data centers. And until it catches up, you could see some bearishness in AI stocks. So I thought that was pretty interesting. The main analyst I'm looking at was the name, an article I highly recommend you guys read. I'm going to pull it up. Just a second. So I have it saved. Alexander Campbell. Yeah, Alexander Campbell. Let me show you. So Substack, Alexander Campbell. Substack. Yeah, this guy. So this is the article. 26 views for 2026. Awesome article. He gives 26 market callouts for 2026. His win rate in the past has been 80%, meaning most of the events that he predicts, or 80% of the events that he predicts, actually happen. So you can see silver mooning, Iran, Greenland, Russian, boats. So that's all risk off right now. That's all causing metals to be bullish. That's kind of the only move that is prevalent so far. I mean, what I'm seeing at the moment is stock market is kind of quiet. There's not much going on, except on the Russell, which Russell is doing pretty well. Russell is actually doing pretty well. DAX is continuing as well. So let me list all of the active assets at the moment. It's going to be the Russell. It's going to be the DAX, Nikkei as well, not on this chart. It's going to be gold, silver, and the DXY. So dollar catching a bid. That's about it. Rest of the stuff is pretty sleepy at the moment. Let's see. Hypothetically, what do you think gold, silver, BTC will be in 20 years? Much, much higher. Much higher. So it's just going to continue. It has been going higher for years now, decades, hundreds of years, gold and silver. The trade or the trend is to the upside, no doubt about it. US stocks, unless something catastrophic happens, unless the US ceases to exist, the NASDAQ, the S&P is just going to continue flying higher. So it's kind of the easiest trade in the world. Just long-term, buy the S&P, buy the NAS, buy gold, buy silver, buy Bitcoin. Ethereum, you can buy it as well, but I like Bitcoin much more. That's just my my take on it. JXY going lower today, not surprising. So the yen is going lower. Yields are climbing higher, but staying a bit flat overall. The yields seem super boring. US oil, I'm with the experts. I think it's kind of bearish. It's going to be bearish in 2026. The targets, I saw some targets calling for 50 per barrel. Whoop, this is the wrong one. We want this one, 50 per barrel. I think this is a good target. And if the opportunity presents itself, I may look to sell oil until we reach 50. Let's see the Edge Finder, top setups. Oil, neutral reading at the moment. I just think it's going to be an oversupply. Venezuela is online. US is going to buy a bunch of oil from Venezuela. That's the last thing I saw. So supply increases, price should go down. What is pretty interesting is that Russia doesn't make much money from oil if prices go to 50 per barrel. So if Trump manages to crash the price to 50 per barrel, Russia is going to have a lot less funds to fund their war in Ukraine. So that may be a play against Putin, possibly. It will be super interesting to see what happens. Again, oil prices, I think, should be bearish in 2026. And if we can maybe break this support, this has been a pretty strong support level. If we can break this support level, I think 50 is a good target. I think 50 is achievable. So let's see if that can happen. Hopefully it can. I think it will be pretty good. For inflation as well, oil is one of the main contributors for inflation. So you want to see oil prices go lower. No one likes inflation if it's too high. If inflation is very low, then it's a problem. But if inflation is too high, no one benefits from that. Okay, that's about it from me. Thank you guys very much for watching. Some plans for the next week. I'll be streaming for every single day. I'll be doing DNA funded account giveaways, so make sure you guys join my segment. On my watch list, I'm still in Aussie USD, and I'm closely watching USD JPY to potentially execute a sell position because I believe we are very, very close to an intervention. And I'm actively looking to buy gold. I want to get in gold. I want to exploit the uptrend. So let's see if we can do that. All of the signals will be posted in the A1 Trading Discord. Thank you very much for watching, and I will see you next week on Monday. See you. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.